if you posit that they're bad regulations, then they'll be bad. And if they're good regulations, they'll be good. Everything that I can see about the regulatory environment implies that the regulators are actually pretty well informed. Right? They recognize the innovations that exist. If you parse every word by Gary Gensler for the past 5 years, what he said is Satoshi's innovation is real. He recognizes the existence of decentralized digital property, and that is not a security. He said that there is a place for a stable coin, a digital currency. He's implying that the world would like dollars to circulate on some kind of crypto system. He's implied that trading 24/7, 365 is an advance. Technology is good. And if you offer a security to the general public, you have a duty of transparency to them so they can make a rational decision. So if I do sell you $50 billion worth of dog tokens, and I tell you I've got $50 billion in cash to back them, but in fact I have no cash to back them, right? I've misled you as an investor, right? So all of those things that he said seem to be quite reasonable to me, right? And the thing that's holding the industry back is an ambiguity about the definition of a digital security versus a digital property. And because there's so much ambiguity, you have thousands and thousands and thousands of digital securities that are competing with the digital property. And if you're a rational person, and if you can't distinguish, and you're looking from the outside and you say, well, I'm sure there's 1,000 digital securities out there that are currently unregulated, that are being treated like commodities, I think that would give you pause. If you look at the sources of volatility in the crypto industry, some dude creates a dog token, issues it to his friends, levers it up 100 to 1, cross-collateralizes it into another token, trades it at midnight, tweets about it, cross-collateralizes that into ETH, then trades that against Bitcoin. Okay, what could go wrong? Like, so people look and say, well, Bitcoin's highly volatile, I'm afraid to own it. Where's the volatility coming from? It's coming from the excessive leverage, the unregistered securities that are cross-collateralized into the asset class. It's coming from immature tax regulation. I'll give you an example of a tax regulation. If you sell $1 billion of Apple stock and you buy it back 18 minutes later, right? That's a wash trade. You can't take a tax write-off on that because you didn't actually dispose of the asset. You were just trading it back and forth. If you did the same thing with a crypto asset, you could. So there's an incentive for someone to wash trade aggressively with leveraged crypto assets. Why? No good reason. If you thought about it a while, you would say, if you're going to have a tax law that says you have to wait 30 days before you buy something back in order to take a deduction against it, you should probably be consistent, right? And not, a fungible share of Apple stock looks like a fungible token of Bitcoin. They both kind of look the same. But the treatment of one is different than the treatment of the other. So if you have asymmetries in the society where one thing is treated differently than the other thing, either with more leverage or you're encouraged to trade it with volatility, you shouldn't be surprised that you get that volatility. Well, I mean, the first regulation that was material to me happened in 2014 when the IRS designated Bitcoin as property. They could have said you got to pay tax on the unrecognized capital gain every year, right? They could have said it's not taxable ever. So they said you pay a long or short-term capital gain when you dispose of it. That was pretty critical, right, as a regulation. In fact, probably one of the more, probably the single thing that distinguished it, right? If they had taken a different view, they could have said it's currency and you don't pay tax on it when you transfer it. It could have been in a currency bucket, but by establishing it as property, they made it not a currency, they made it a property. All the regulatory issues we're talking about, I don't really think they're about Bitcoin. Right? If you look at the crypto economy, you could divide and segment the market into crypto property, cryptocurrency, crypto securities, crypto art, crypto platforms, crypto exchanges. Bitcoin's crypto property. It's the apex crypto property, and it's 100 times bigger than the next viable crypto property. And the regulatory question, the big one is, are you allowed to own property? And the answer in North Korea and Cuba is no. Right? The answer in China is sort of sometimes for a while, we're back and forth, right? Right? Do you own your house, or you have it for 70 years or 100 years or whatever? But mostly, yes, you can own property. In Western Europe and the US, generally you can own property. So the other regulatory questions are, what's a crypto exchange? Okay, if you're an exchange, can you actually trade? And do you need to have a surveillance agreement with the SEC? A national securities exchange in the US can let you trade stocks with 2x leverage. In the crypto economy, they're trading at 100x leverage. Right now, they're trading with 20x leverage. Okay, so how much leverage can you trade with? Right? Who's responsible? Is a DeFi system an exchange? I think a lot of people think yes. Is it decentralized? No, not really. They don't think it's decentralized. They've said that. So is a token, this token, is this equity or is this property? If it's equity, what kind of disclosures do you need to make on the equity, and what's your civil and criminal liability on the promotion and the trading of that token? Those are all outstanding questions that'll have an impact on everything other than Bitcoin, right? What are your obligations under crypto art? If I sell you 10 NFTs for $1 million each, and I swear to you that I'll never mint any more, and then I create another anonymous persona, and I mint 10 more, and I sell them, and then it comes out, right? Did I defraud you? Right? At what point does an NFT become a security? Right? I mean, it's pretty easy to say a $50 piece of art doesn't feel like a security. What about when it's $50 million? What about when it's $500 million? Is that a security then? Do I have ethical requirements? So, and then with currencies, there's three types of, a cryptocurrency is a dollar. So I want to move a dollar from me to you, right? The thing that creates a currency in our modern world is a nation state law. If the nation state designates that you can transfer the asset from me to you without a taxable event, it's currency. The euro is a currency, the dollar is a currency. If I transfer gold or shares of Apple stock or a building to you, it's not a currency. I'll have to calculate my basis in it, calculate the fair market value of it, the difference, and pay a tax on the difference in the transfer of it. So currencies are assets that exist because there's a nation state that's effective. When the nation state is no longer effective and the government collapses, of course the currency collapses, and then people adopt another currency. In El Salvador, they dollarized. Lots of countries, they dollarize because their nation state is no longer able to maintain a currency. Now, what cryptocurrency is compliant? The President's Working Group paper implied that the preferred stablecoin dollar would be issued by an FDIC-insured bank. That's what they would like. There is no FDIC-insured bank currently issuing stablecoins. So the investment-grade blue-chip cryptocurrency is an ideal that does not exist in the real world. There's a second tier of currencies, call them rated currencies. It would be like Paxos and Circle, and they are backed by currency and currency, cash and cash equivalents and the like. But they're not issued by FDIC-insured banks. They're issued by licensed money transfer agents or licensed entities that are recognized in the US. But they're second tier. So third tier, they're unrated cryptocurrencies like Tether. They're backed by something, and they give you a broad bucket of what the something is. Or even a stable coin like DAI or UST, they're backed by something. What is that something? They're not audited. It's unclear. They're not transparent. They all look like dollars. The low risk one doesn't exist. JP Morgan hasn't issued the JP Morgan dollar. Meanwhile, the world has a multi-trillion-dollar appetite for crypto dollars. If there was a broad supply, and if the technology was a bit more advanced, there'd be trillions of USD circulating on crypto rails, and the US dollar would be spreading into places where it's not currently used on a daily basis, and all the weak currencies will collapse in the world. So when you say, what regulation are we waiting for? Well, we're waiting for the definition of a cryptocurrency, a crypto security, a crypto platform, a crypto exchange, and then lines as to what you can do with a currency and exchange or a security. And we don't have bright line guidance, which means that entrepreneurs are left to do something, and they either have to do something knowing that they're taking some kind of future risk, right? Or they have to do nothing. I've talked to people that run banks, and I said, well, you're an FDIC insured bank. You see, the administration just said you can issue a stable coin, will you? They're like, oh no, we could never do that. If it's not KYC'd, we'd be shut down by the regulators. So on one hand, you've got this deadlock, right? There's no clear path to create a compliant crypto dollar, but there's extreme demand for it. So that demand is being filled kind of 50-50 by the layer 2, or the level 2 and the level 3 offerings, and the market is slugging that.